back, baby. We back with another one, boom and crash liquidity concepts. The series continues, and now we are on episode 5, where we cover equal lows liquidity, right? So on episode 5, we are going to do more or less the same of what we did last week, but on the downside, right? So we want to explore liquidity on the equal lows, but looking on the downside, right? So now, before I continue, I have 2 requests from you guys. One is make sure to have watched episode 1, 2, 3, 4, right, of the bclc. And then the second request is that you better go watch the boom and crash capitalizer series. I'll link the playlist on the top right. Actually, check out on the top right. Do you see it? Yeah, that one. So make sure to click on it because we are going to utilize concepts from that series. Let's continue. They exist in every instrument, in trading instrument, right? So at the moment, we'll be focusing only for boom and crash, right? So in boom and crash, there resides liquidity below equal lows, and mostly or most of the time, you know, these equal lows are always triple bottoms, double bottoms, and these trend line, this double bottoms and triple bottoms phantoms, they are like a market trap sometimes. So the market tends to run below equal lows, and you need to be able to recognize this phenomenon before and after it happens, right? So that's what I'll be training your eyes to see. So we're gonna go in this order. We're gonna start with crash 300, 500, and 1000, then proceed to look at equal lows on boom 300, 500, and 1000, right? So that's what we're gonna do. Let's jump into crash 300. Now we look at our first chart of 3 and crash 300. So we had price going up, and as it was heading up, it was heading into this 30 minutes bearish order block. But as you can see, we had this almost equal lows, right? So we see the price did come, form this new low, and then drop to the downside. So that's how price attacked equal lows for this one. Now let's look at the second one. So we had crash, drop into the downside, and then pushing, and then it's been consolidating for some time. But when it was consolidating, we formed this 2 lows, 1, 2. So they're relatively equal. So we had them. Now remembering these points of liquidity and taking out this old low and then running down this equal lows, right? And then heading up for some level, which I happen to see it's a M30 bearish order block. Remember, M30 means 30 minutes, then negative OB stands for bearish order block. Another example. So we had price going up and taking out this old low, but we had a liquidity void on the left side. So we want to see if they're going to take out this equal lows, this 1, 2, and then drop to the downside, right, to some level. I don't know what level it could be, but yeah, we had price dropping and then filling this liquidity void and then continue going up. So that's how we look at equal lows liquidity on C5. Let's look into crash 500. Our first example. We had this old high here, price went down and then pushed to the upside, took out this old high, right? And then dropped, and then we had this two equal lows. So you want to see if price is gonna drop below this two equal lows. And that's what happened. We had price taking out these two equal lows and dipping into them and then pushing to the upside. So that's how they managed to exploit equal lows liquidity. Second chart, we had price dropping, then we had 2 relative equal lows, then we had this break of market structure when price took out this high, right? We had price took out this high and then they dropped to the downside to reach into equal lows liquidity, and then pushing to the upside. So now we look at the last example. We had price dropping, then consolidating. As it is consolidating, we broke this high. Also, we broke this high with this upward movement. But as it was going up, we had this 1, 2 lows left. So we want to see what's going to happen if they reach into this high. Are they going to drop to the downside and reach into this equal lows liquidity? And that's what happened. After doing this, they dropped massively to the downside and then definitely reached into equal lows liquidity. Let me have your attention for a minute. So I want you to go on YouTube and search at Capital Tradings, right? Because I want to share a special video with you. It's a video that's going to benefit you. But before that, the first channel, that channel that you see on the screen right now, that's the one I want you to look at. We have about 1.08k subscribers. Get connected with us right now. Click on it. So I want you to go to playlists, right? When you get to playlists or even on videos, I want you to go to video number 4 of the Boom and Crash Capitalizer series. It's special. It's special because that's where we're gonna cover how to look for entries and exits on lower time frames. That's where you're gonna check out trading ranges. That's where you're gonna find out how to identify internal and external range liquidity and the likes, all those things. So I want you to check it out and just take your time, watch it. Make sure to watch it, yo. Make sure to watch it, please, because it's really important. It's beneficial. It's beneficial because for the most, whenever I'll be explaining stuff on this boom and crash liquidity concept, I'll be referring back to the stuff that we had covered on this video. So go to it and make sure to like and share the video, guys. And please make sure to just copy the link and share it with anyone who you think might find it useful. Thank you. To C1000. So we had these old high dropping and then pushing to the upside. This was price repricing to the top of our range. Remember, to find out a range, you have to watch episode 4. Because that's where we did try to touch on the trading ranges. So we're gonna have price going up, and this is the range high, this is the range low. So as soon as they go up, now prices become cheaper to look for sales. And that's what happened here. It dropped a little bit, and then we had this low and then this low being formed, right? Also, we had this bullish order block being formed. So let's see how price reacted to the range. So we had price taking out this old high over here, right? And then dropping to the downside into this bullish order block with this movement over here. So that's what happened. Now we look at the second chart. We had price dropping, right? So we had this old high here, these two old highs, these two relatively equal highs. So price did run over this high, then dropped. As it dropped, it came back to retest this level. So as soon as they drop, we look at the last down close candle before price took out this old high, and this becomes our M30 bearish breaker. So price might or will have to return to this level after some time or at some point. And that's what happened here. They dropped, then they formed this two relative equal lows, and then we had this high taken out. So let's see, they went to the upside and then reacted to this bearish M30 bearish breaker here, and then they headed straight from our liquidity pool. Third chart, we had price dropping, and then we had this high, we had this low, and then these low, right? So we want to see if price will reach into that at a later time. So price did that. It's like they were hunting for stops. They were on some hunt of something, and they did that, and then they continued to push into the upside. So that's how you look at crash 1000. Let's jump into boom 300 examples. So we had a boom 300 chart here. They went up, then dropped to the downside, right? Then pushed to the upside and broke this high, and then retraced, and then pushed to the spike to the upside. So you want to see if they're gonna have to come to this fair value gap, this ICT fair value gap. So when they do that, we have this relatively equal lows on the downside. So we want to see if they're going to reach into that and push into our ICT fair value gap. So that's what they did. They reached into our liquidity, then dropped into the fair value gap high, and then spiked to the upside. So that's what happened here. Now we look at the second chart. So on this one, we had price dropping and then pushing. Then we had price taking out an old high. This was a shift in market structure, you could say. Then dropped. So you want to see if price is going to reach into this old low. So maybe find some support on this 30 minutes bullish order block. And that's what happened here. They did reach first, then twice, 2 times into this liquidity, and then found support on the order block and pushed to the upside. Let's look at the last chart. So we had old highs here being broken as price was spiking to the upside, but as it did that, it formed this 1, 2 relative equal lows on the downside. So you want to see if they're going to reach into that, and then that's what happened. They dropped to the downside and reached into these equal lows liquidity, right? So that's what happened here. We have boom 500. On boom 500, we had price dropping to the downside, then pushing to the upside, and then dropping, and found some support on some level, which looks to me like it's a mitigation block. Then pushed to the upside, took out this old high, right? So old high, then we have this old lows liquidity, which then price dipped into that, then continued pushing to the upside. Second chart, price dropped. We had this old high being formed, then dropping price to the downside, pushing it to the upside, dropping it, but forming equal lows liquidity. Then below it, there was this big green candle, which is our 30 minutes bullish order block. So we had price reaching into this liquidity, and then into the 30 minutes order block, and then push to the upside for these highs as targets. The third chart, we had price dropping, right? Dropping, but we had this last down close candle before the up movement. So that's our bullish order block. So you want to see if price is going to reach into this old lows liquidity. And that's what happened. They did reach into those old equal lows and found support on this bullish order block and spiked to the upside. Now we jump into boom 1000. So for boom 1000, we had this old high, price reached into this old high, and then we want to see if they're gonna drop to the downside to reach for this 1, 2 relatively equal lows liquidity, right? And then find support on this 30 minutes bullish order block. Yep, that's what happened. We had this old high being broken, then dropping price to the downside, reaching to this equal lows liquidity, and then finding support here and spike into the upside. That's what happened. Let's jump into the second example. We had price dropping, as it was dropping, we had this breaker being formed. Remember, a breaker is the movement that was used to push to the upside and break previous highs. So this the up down close candle now is gonna become our bearish breaker. To learn more about that, go check out episode 2 of the Boom and Crash Capitalizer. So we want to see if price is gonna drop to the downside into this equal lows liquidity. That's what happened. We had this price reach into this and then drop into the downside into our equal lows liquidity, also into the bullish order block. The last example, we had price dropping, and then now we had this old high being broken. Then we're gonna see if we're gonna get this 1, 2, 3 relatively equal lows being taken out. Also, we want to see if they're gonna target this old lows, right? So that's what happened. We took out this old high, then dropped to the downside, took out this old lows liquidity, also reached into this old low, right, as hunt for liquidity. So that's what happened on Boom 1000. That'll be all for today, guys. Make sure to like, share, and subscribe to this video. Subscribe to this channel, and make sure to share this playlist and share this series with anyone who you think might need it. So on our next episode, which you should wait for, we'll be touching on consolidation highs, liquidity